trader for you. So going to do weekly analysis as we do every week. Looking at the weekly chart on the right, and on the left you have a daily chart. Just going to expand this. As far as the weekly chart, you clearly see our trend is up. Okay, trend is up in the weekly. We're actually somewhat of a basing around this area and testing the resistance around 212.45. Somewhat of a pennant, ascending triangle, whatever you want to call it. Okay, but the whole important thing is that we are in an uptrend, and we're basing at the resistance, basing at the highs. Possibly when you're basing for around that much of a time, the likelihood of breaking out of here is higher. Can it go lower? Yes. And prices put tops in, prices put bottoms, but we're trading based on what we see. What I see right now is price in an uptrend, still being able to make higher highs and higher lows, and till it stops, I'll be bullish till then. Let's look at the daily. On the daily chart, somewhat of a, you can call it again, ascending triangle, right? Higher highs, higher high, higher high, higher low, higher low, higher low, and we are right below 50 and 20, right? Close below, still above 200 day. That's fine. All we could be getting is somewhat of a minor correction move, right? Here is what I am waiting for it to break before I change my whole thesis. Okay, I want the price to actually come down and retest this area and possibly have a bounce back. Can it just completely go up from here? Yes, but you gotta have a roadmap, and this is where I see as a strong support where price could come down, not just because it's a 200 SMA is there, just because there is a lot of resistance in here that was once and will be acting as the support now. And this is the area where I will be looking for somewhat of a bounce on a reversal candle. Um, uh, as I'm saying this, guys, it's important to understand that your analysis could be 100% correct. Your charting analysis skills could be 100%, superior than other traders or whatever you're doing. Okay, as far as the technical analysis goes, and or even if you're starting out as a trader, okay, and if you're following everything the right way, it doesn't mean that you have to be right every single time. Okay, the setups fail, okay, but what protects you is a stop loss. You gotta have a stop loss. It's almost like a protection. It's the insurance for every trade that you take, that okay, if it goes against me, I have my stop loss, and it becomes you makes you a more like a robotic trader, and that's the way you want to trade. Setups are going to fail, okay, and there will be a beautiful setup setting up. Okay, you could have a beautiful head and shoulder, beautiful symmetrical triangle, beautiful hammer candle, right? And it will fail. Okay, at one point it will fail, but don't think that your analysis is wrong. It's just that market is right every single time, 100% of the time. So go with that fact, and don't beat yourself up because you had a stop out, and try to find errors in your trading. Okay, and I've been there, done that, and you go back and say, okay, what did I do wrong? Instead of basically leaving it as is, try to go back and see, okay, what could I have done to stay out of a trade? Was it not at the support? Was it not at the resistance? Was there some kind of major news that was coming out? Maybe could have stayed out of the whole trade. Or it could be basically, like I said, it could just very well be you had a beautiful setup and it just didn't work out, and you let the stop work, right? You will have instances where you'll have a perfect setup going against you, but with your protection via your stop loss, you will be able to get back in a similar setup that will work. And best way is to document, journal, whatever that you do to enhance your trading, to become a top 10 to 15% of it in that bracket of traders. You gotta have some kind of set rule based strategy. You got to have a trade plan that you can follow all the time, and there are many out there. Okay, just find one, Google it, Yahoo it, whatever you need to do, find one, get a template out and start making your trade plan. Don't just solely start trading because the stock looks good, okay, the fundamentals look good. Have a trade plan and say, okay, what am I trading? Am I a swing trader? Am I a long-term trader, or am I a scalper, right? And if you're a scalper, have some kind of strategy for your scalper. How many cents you want out of a trade? 10 cents, 15 cents? What is the exact uh, position size you're trading? 1,000 stocks, 1,500 stocks, whatever, right? And do I have some kind of rule saying, okay, I'm going to take this trade at the market open, okay? I'm going to take this trade in the lunch hours, okay, when the market is slow. Maybe you want to lower down your holdings when you take the trade in lunch hours, because who controls the market in the lunch hours is a couple pit traders sitting in the trading off the pit and saying, you know what, this guy has a stop out, let's stop him out. And literally they can see your stop out when you're trading such a small or thin stock. And that's why trading the volatile hours is the best. First couple hours and last hour and a half or so are the best hours to trade, because you can actually see that there's a lot of volume, there's a lot of activity during those hours. So again, the lesson from today's is basically, yes, we're talking about the whole weekly analysis, when a weekly being up, a daily kind of ascending triangle. This is the support, right? This is where I see prices could very well come down to do a fake breakout of this trend line, and then kind of trap the people who are short and then go up from there. But the lesson out of this is, the whole presentation is, you you could be 100% correct, okay, but don't beat yourself up just because it was a stop out for you. Get back and start trading again. Get back, start trading again, right? If you need to, if you're good with the simulation mode, go into the simulation mode, right? Although, just my opinion is that when you trade, live, okay, you are control your emotions, your fear, your greed kicks in at that point. It's not gonna kick in simulation. We're like, you know what, it's a loss, I don't care, I'm just gonna let it run, right? It's gonna happen. It had happened to all of us, right? So trade, but trade really small. This way, instead of trading 100% of your holdings, trade 10%, right? Instead of trading 100 stocks, trade 10 stocks, but do everything that you would do with the real trading analysis, okay? Apply the real trading analysis. Doesn't matter. It's not, at that point, it's not about not about how much you're gonna make, how much you're gonna lose. It's about if you follow the plan, if you follow the strategy. And who knows, 10 stocks might give you enough of the risk reward ratio. If you're risking, okay, if you're risking this much, okay, and you're making this much, okay, that's your risk. Change that color out. Okay, that's your risk. Okay, even if you have 10 stocks, doesn't matter. But you need to have some kind of trade plan saying, okay, 1 to 1, I'm going to take some off. At 1 to 2, I'm going to move my stop to break even. At 1 to 3, I'm going to let it ride, and I'm going to basically kill the target, right? Kill the stop, kill whatever you have, right? Or I'm just gonna let it ride. That's all, by leaving your stop to either break even or right below the space, and let it run as long as it wants to run. This way, once you have that mentality, mastered out with 10 stocks, 20 stocks, 50 stocks, whatever you want to do, you can go into trading big. Trading is not about calling out stocks, right? I see people, I made this much, I made that much, and trying to be superior and say, okay, I call this out. Your account could be so much different than mine. My account could be so much different than you, and we could both be trading the same stock, right? So what it comes down to is trading psychology. Okay, if you don't have some kind of rule-based strategy saying, you know what, this is what I'm going to follow, right? And I could be one saying, okay, I'm going to take profits here, profits here, profits there, right? And second day, my stock goes in my direction, and I take all of it out. Where goes my strategy? Nowhere, right? And then on the other side, Matt goes, you know what? I got in here. I'm going to follow what I learned, right? I'm gonna follow what I learned from Jazz, and he said, 1 to 1, 1 to 2, 1 to 3. He follows that strategy, over and over. 1 trade, 2 trade, 3 trade, 4 trade, 5 trade, right? And then he's confident enough. All you really gotta do at that point is put in extra zero and end of the stock, right? From 10 go to 100, from 100 go to 1000. But you have a background of confidence that can support your analysis every single time. And as I said, are you going to be wrong? Yes, you're definitely going to be wrong. But market is always right. You have to have that mentality. The market is always right. You're going to get these huge spikes here and there, and you're going to get these huge pullbacks at the same time. But if you are prepared to what you want to do, okay, you're going to have that type of mentality before to go even in trading. Trade plan, trade plan, trade plan. One must have a trade plan. I can't stress that enough. And I've talked to people, following some of the trades or in a sim account or even real account, and saying I did really good, with this stock, and this stock was same setup, it didn't do that good. So, and I said, do you have a trade plan? What was your trade plan on that? One of the stocks gave actually literally on a day trade 80 cents, but that person didn't pull out. The first day, she's like, oh, he or she made like decent amount of profits. So second day is similar type of trade, and when you're getting on a day trade 80 some cents, that's a winner on the day trade, guys. Let me show you a real quick example. Okay. QIHU. QIHU was alerted in my elite group around 5450, right? And I said look for it to have initial move to the upside. And was this move expected? No, this move wasn't expected on Friday. Okay, this was a massive move. Probably some news came out. You can actually see the volume on it. But this was alerted 5450, and we talked about that how low risk of a trade that is. And if you look at let me go back in a smaller time frame. We actually call this trade out again, QIHU, right? So this was ripped. Okay, this was before it was even at 5450. So on Friday we talked about this trade right around here, guys, right around here. Very small risk trade, 57.66, right? And it just instantly ripped. I'm not sure if it was here, but doesn't matter, right? I believe it was here because I think we missed the initial move. Then this was the move that was caught. So this was trade right here. It just completely ripped. Okay, and if you look at a trend, right? If you look at a trend, there is actually no weakness in this trade. Okay, and this is where as a trader, you need to have a trade plan. Okay, where is exactly I'm going to take profits? How am I going to take my exits? How my targets, right? What is my nearest resistance? What is my nearest support? And what are my rules as far as the profit taking? Do I have a dollar profit, or do I have a technical stop, etc., etc., right? So that was trade that was called. That was one of the members actually called another trade around beautifully, right? Beautifully. So that was now a stop out. Kept ripping and ripping, right? You have no idea how far the stock could go. At the same time, you have no idea how low it could go. You let the plan work. Simple as that. You let the plan work. And if you let your plan work every single time, that's consistency. Okay, if you get in a trade that didn't work out, okay, you follow the plan and simply didn't work out, right? And you take a trade again, that plan didn't work out, you follow the plan, and if it didn't work out for 1, maybe 5 times, 4 times, 6 times, right? Then you go back, revisit your trade plan. You know what, maybe I need to start trading from 5 minute, maybe I need to go start in 3 minute, right? Or whatever you need to do, whatever modifications you need to make in a trade plan. But if you make a trade plan and keep changing that trade plan after one trade, after second trade, right, there you are not following the plan. Once you make a trade plan, test it out, right? That's why I say small amount, test it out. You don't have to play big, but once you know that it's working, you don't need to make any changes in that. Once you know that these are the setups, these are the trends you're gonna trade, every single time. You know that 87, believe me or not guys, 70 to 80% of the time, if you have a trade plan, if it's working, again, you're not going to be right, all the time, but based on my experience, based on what I've seen, based on the calls that we made, 70% of the time, if you have something that's working, you will keep on tackling those same setups. And if one or two or five setups out of 15, 20 setups does this setup or this kind of trade setup is going to take care of all your itty bitty small losses. So guys, that was it. That was the today's weekly analysis on the SPY and a little bit of a trading psychology that is only controlled by you. You could be the best trader. You could be following the best trader, but it all comes down to you, okay? And you are the master of your own trade, and you are the master of your own emotions, greed, and fear. And you have to learn that first before you become, or that is what makes you a best trader, okay? And that is before you start getting into stocks, futures, forex, whatever it is. You need to have some kind of a trade plan, or what do you want to do in life with a mission statement, or all the elements of the trade plan needs to be mastered first. All right guys, take care, and I'll talk to you guys later.